Welcome to this course designed to help pastors understand their tax and payroll situation. If you've ever felt overwhelmed by taxes, you're not alone. Pastors have a unique setup when it comes to taxes, and it's easy to misunderstand how it all works. The goal of this series is to break down some of the more complicated aspects of your tax situation into easy to understand concepts. We'll explain how being a pastor affects your payroll, the housing allowance, and what it means to have dual tax status. By the end, you'll have a clear understanding of how to handle your finances so you can focus on your ministry with confidence. Before we dive into the unique tax situations pastors face, it's important to have a basic understanding of how taxes work. I'm going to explain the three main types of taxes you'll deal with: federal income tax, Social Security, and Medicare. This broad overview will help you understand where your money goes and why these taxes exist. Federal income tax is the tax you pay on the money you earn throughout the year. It helps fund essential services provided by the federal government, such as national defense, infrastructure, education, and public programs. When you begin a new job, your employer collects a Form W-4 from you, which helps them know how much tax to withhold from your paycheck based on your family's status. That is, whether you are single or married, how many children you have, and how many incomes the household has. Employers then use the information you provide to calculate an amount of your paycheck to withhold. They send this tax into the IRS on a regular basis. At the end of each year, you're given a Form W-2 that shows how much you earned and how much your employer withheld. When you enter this on Form 1040, the income tax return form, it helps you calculate how much your family earned, how much you already paid in taxes through your paycheck, and then settles the difference with you by refunding any overpayments or requiring a payment if the taxes were underpaid. The second tax is for Social Security. These taxes fund the Social Security program, which provides benefits to retirees, disabled workers, and the families of deceased workers. When you retire, Social Security helps replace part of your lost income. For most employees, 6.2% of their wages is automatically withheld from their paycheck, and their employer matches that by contributing another 6.2%. Together, this adds up to 12.4% of your wages, which funds the program. The more you earn during your working life, the more you'll potentially receive in benefits when you retire. However, as we'll see in later videos, pastors are considered self-employed for Social Security purposes. This means you're responsible for the entire 12.4%, which is part of what's known as the self-employment tax. Medicare tax is used to fund the Medicare program, which provides health insurance for people 65 and older, as well as certain younger people with disabilities. Similar to Social Security, 1.45% of your wages is typically withheld from your paycheck for Medicare, and your employer matches that amount. So together, you contribute 2.9% of your wages to Medicare. Being self-employed for Social Security and Medicare purposes, pastors also pay the full 2.9% themselves through the self-employment tax. In the pay stub on the right, you can see an example showing an employee who earned $780 for 1 week of pay. This employee had $200.07 withheld from his paycheck for his portion of the taxes. The church would then contribute the other half of Social Security and Medicare taxes and would send the full amount into the IRS on the employee's behalf. Most people have Social Security and Medicare taxes automatically withheld from their paychecks, so they don't have to worry about setting aside money throughout the year. This isn't optional for regular employees. Employers must do it. Understanding these basic taxes, federal income tax, Social Security, and Medicare, will help you make sense of how your taxes work and why your situation as a pastor is a little different. As a pastor, your payroll is treated differently from other employees. This can be a surprise if you're new to the ministry or unfamiliar with the specifics. But once you understand the basic rules, it's much easier to manage. Let's walk through how your payroll works and what makes it unique. First, let's talk about your dual status. Pastors are in a special tax category where you're treated like an employee for federal income tax purposes, but self-employed for Social Security and Medicare purposes. For federal income tax, your church may withhold taxes from your paycheck, just like they would for any other employee. However, for Social Security and Medicare taxes, you're responsible for paying both the employee and employer portions, totaling 15.3%. This is because pastors are considered self-employed when it comes to those taxes. Self-employed people always pay their own taxes since they don't have an employer to collect the taxes for them. When reading about the combination of Social Security and Medicare taxes, you may see abbreviations like FICA or SECA to describe these taxes. The two acronyms refer to different portions of law that define who is responsible for making sure the IRS or Social Security Administration receives the required funds, but otherwise, they usually refer to the same concept that 15.3% of an employee's gross wages belongs to the government. FICA is used when discussing the taxes for an employee, and SECA is used when referring to someone who is self-employed. While this may seem like a strange situation, the IRS considers pastors self-employed for Social Security and Medicare taxes for one key reason. It allows pastors to opt out of paying the taxes and receiving benefits based on a religious objection without needing the church to be involved in the decision or consequences. We'll discuss this more in a future video. For now, let's look at two examples. Jessica is an employee with a $50,000 per year salary. She is not licensed, commissioned, or ordained as a pastor. This example will not consider federal income taxes, since that tax is based on your family's unique situation. Because Jessica is an employee for Social Security and Medicare purposes, the church will withhold $3,825 per year from her check. The church will contribute the exact same amount and will combine it with Jessica's withholding to send to the IRS each pay period or month. Pastor Greg also works at a church and gets paid $50,000 per year as a salary. But because he is ordained, he is considered self-employed for purposes of Social Security and Medicare, or SECA, taxes. The church is not allowed to contribute to his Social Security and Medicare taxes, so Pastor Greg is responsible to ensure the full $7,650 owed is paid to the IRS on his own. This difference is something you'll need to plan for as a pastor, since the self-employment tax can significantly impact your overall tax burden. Once you understand how taxes work for pastors, the next step is figuring out how to actually pay them. Because pastors are considered self-employed for Social Security and Medicare taxes, paying taxes isn't always as straightforward as it is for regular employees. In this video, we'll talk about two main ways you can pay your taxes: through a voluntary withholding plan or by making estimated quarterly payments. While churches are not allowed to withhold Social Security or Medicare taxes for pastors, you can ask your church to set up voluntary federal income tax withholding. This is an option where your church withholds extra federal income tax from your paycheck and sends it to the IRS. Because your tax return is used to calculate all three types of taxes, over withholding federal income tax can produce a credit to use for Social Security and Medicare taxes. The goal is to overpay your federal income tax by at least the amount you expect to owe for Social Security and Medicare taxes. Then you will avoid a large tax bill. How does this work? Start by completing your W-4 based on your family's situation. Then calculate your expected Social Security and Medicare tax and divide that number by the number of pay periods in a year. Enter this number in box 4C. That amount will be withheld from each paycheck in addition to your normal federal income tax withholding amount. If you don't opt for voluntary withholding, the other method is to make estimated quarterly tax payments directly to the IRS. This is a common practice for self-employed individuals and can help pastors manage their tax obligations throughout the year. To figure out how much to pay each quarter, estimate your total tax liability for the year. This includes federal income tax and self-employment tax, which covers Social Security and Medicare. I recommend working with a tax professional to calculate this, as the calculation depends on all income in your family, how many dependents you have, and many other factors. Divide that total amount by 4 and make payments by the IRS deadlines: April 15th, June 15th, September 15th, and January 15th of the following year. If your income changes during the year, you can adjust your quarterly payments accordingly. You can make your estimated payments through the IRS website using direct pay, where you can pay directly from your bank account, or you can use other options like mailing a check or paying by debit or credit card. The IRS website walks you through this process. Always be sure you are making a payment at the right website to avoid scams. The domain should always end in .gov. It is worth noting that if you don't pay enough taxes throughout the year, either through withholding or estimated payments, the IRS may charge underpayment penalties. To avoid this, make sure you're paying enough each quarter or having enough withheld from your paycheck. Choosing between voluntary withholding and making estimated payments is a personal decision, and either option can work as long as it fits your financial situation. The key is to stay on top of your tax obligations so you don't face any surprises at the end of the year. If you get behind on your taxes, catching up becomes extremely difficult.